The local market rose 1.2% today, a second straight day of gains and its biggest rise in a month. For more analysis on what happened today and what he's recommending for the year ahead, we're joined by Simon Bond from Morgans. Simon, welcome to the program.
What a great lineup. So I was just having a look at the...
It's a very good lineup, and it's great to have you opening the batting.
So early, so I tell you what, so early in the year, yeah. that's a very strong batting order. So well, it's nice to open it. Thank you.
You're very, very welcome. So, mate, what happened in the markets today?
We simply followed Wall Street, mate. It's extraordinary how, as Australians, everybody's down the beach at the moment, and really the Australian market doesn't kick off again until after Australia Day. We're a nation of holiday lovers, so there's not a lot of people that have got the sort of sand out from under their feet yet. We've got to wait till they really get back to get their feet back under the desk to get things rolling again. So it's very, very quiet.
Yeah. How are the volumes?
Volumes are thin. So
yeah.
they would be thinner if it wasn't for the algorithmic trading. So there's not a lot.
They weren't too bad last couple of days, were they?
There's not a lot of what you'd call natural business around. And you can see from the size and the volume of the trades, they're tiny little trades, so it's a lot of the stuff at the moment is just being driven by the computers, and that can also make the gains or the losses seem much more significant than they are.
Yeah. So, earnings season, not too far away. I'd like to talk on that, but firstly, where do you see the ASX sitting at the moment in terms of, I guess, a valuation perspective? If we look at, what's the number now compared to sort of historical highs?
Our view is that it's a tad overvalued. Not much, maybe 80 or 70 or 80 points according to our models. But I do feel that those models are going to change significantly, as you say, when we get into this year's reporting season, because I think that this upcoming reporting season will be very telling for who's going to do well and who isn't. And JB Hi-Fi yesterday, from talking to guys around town, JB Hi-Fi had a stellar Christmas, and they would have had a much better year than last year. The Boxing Day sales went pretty well. There was a lot more upbeat commentary around, yet the stock dropped 6% in a day. So it's very, very hard to get a handle until I think these companies come out with some to put some flesh on the bone rather than us just simply sitting around and guessing.
Are you positive on the earnings season?
I think it's going to be great for the new businesses, and I think it's going to be dreadful for the older businesses that haven't been able to catch up and to keep in line. We look at the share prices of realestate.com and Seek and all of these companies that we talk about that are through the stratosphere. Xero today, which is a company that Peter and I have
accounting software.
Accounting software. We've been talking about this stock since about $3. Today it's 40. It's astonishing to see how some of these companies are having such a massive run up with no earnings.
Yeah.
And they've actually come out and said, look, this year we're going to lose money. Next year we're probably going to lose some more. So the market's giving.
So Xero doesn't have earnings yet?
Not at this stage.
No, okay. So, and so Xero would sit in the technology sector?
Yeah, in the accounting technology sector.
Yeah.
So it's a similar. People would say, is it similar to Reckon and MYOB? They would say not, but it's in that. To give people a bit of an idea, it's an accounting software business that's had some very, very significant horsepower given to it by investors in the US, notably the guys who started PayPal and who really understand that technology space.
Yeah, and I think the ex-founder of MYOB is involved as well.
Yes, yeah. From Craig Winkler.
Yeah,
they started it in New Zealand, and it's been a company that just continues to race away. But is it worth $3 or is it worth $40? Well, again, a lot of that's going to come back to what the earnings look like.
So we've had a bit of a theme around or a bit of discussion, I should say, around the technology sector in the last couple of weeks. From a couple of guests who've come on to say that they think it's the next sector to boom. Could be a bit of an aggressive statement. What are your thoughts on the technology sector, and would you be investing in it?
Well, what we suggest, there's two things that we like to try and do. Number one is save people from themselves, because people always get some crazy weird idea, especially around this time of year when they've gone down the beach and the guy that they're on holidays with has told them that some sort of great stock tip that I think what they say. A guy came in to see me the other day and he said, "Oh, this guy told me this company's a gold mine." And I said to him,
It is.
are gold mines anymore? Like with the price of gold doing what it has, how many gold mines have actually been going out of business over the last 12 months? So we're going to have to come up with a new term. So we're going to call it like a technology mine or something. But where I'm going is that what we also suggest to investors is to invest in businesses / companies that humans rely on for their existence. We see significant deflationary issues this year. Similar to what we saw last year. We really worry significantly about unemployment, and the numbers that were at the employment figures that were out today, the Australian numbers, the Australian dollar fell, I think, just under 1 cent this morning when the numbers came out, and the official stats were a loss in December of 20,000 jobs. Economists were expecting a rise of 5,000. If we can't add jobs in December, when you've got the Christmas, the retail, the full selling period coming up, that doesn't augur well for employment.
But the market pretty much ignored that number today, right?
Again, on the back of the US market.
Of the US, of course.
Volumes weren't there, so the institutions weren't there to sell into that rise. So again, it was not as real as it looked.
So let's touch on deflation, and there was some commentary this morning from Christine Lagarde, head of the IMF, who was fairly aggressive in her views that deflation is an issue that the world needs to worry about and the authorities need to worry about. Do you want to talk us through some of your views on that? Because you mentioned deflation before, so.
We've been worried about it for a couple of years, or more than a few years. But what people don't understand, a couple of interesting things. When somebody loses their job, it's taking them longer to find a job if they can find another job in this country. But the new job that they're invariably getting is paying them less than the previous job. So their consumer spending power is fallen straight away. So you've got consumers that are retrenching. I spoke to a lot of people who said, this Christmas, as soon as I go back to work, I'm tightening the belt, I'm reining in the spending, and that's going to be a significant worry for the restaurants and the cafes, because you won't have a lot of that discretionary spending. But what we do worry about is the amount of businesses and companies that are simply giving things away. Now, years ago, there was a company called Kodak that employed 140,000 people. That company, it wasn't replaced by, but a company that you would know because you're still very young.
Thank you.
Instagram. Which was sold to
Facebook.
To Facebook
for about $1 billion.
I think it was more than that. It was about 2 or 3 billion.
Was it? Okay.
They had 13 staff. Now, one could argue that they actually had more than 13 staff. I would say that they had 100,000 or 200,000 staff, but their staff are the people who are contributing the content for nothing. So you've got a world that going forward where people are actually working for free for these companies, so you're going to see significant value that's going to move to one end of the curve. So your Facebooks, your Googles, your Instagrams, these are the businesses that will continue to do well because people are throwing privacy out the door and they're saying, well, Marty, I'm prepared to tell you everything about myself for nothing. You take that data, you use that data, you then sell that data, whether it's to a bank or to a supermarket, whether it's Coles or whether it's Woolworths. So all that data has value.
So how does an investor get exposure to some of the US stocks you mentioned, the Facebooks, the Googles?
Well, they can simply, they can buy it. Google is
ETF?
I would just buy the stock.
Directly, okay.
Directly in the... It's as easy as buying Australian stocks. But I do worry here about the size of the market. And you look at businesses that are really going to say, well, where am I going to get growth from this year? Growth will come from healthcare because of the demographics, obviously. Older people, there's ageing population. So Ramsay Healthcare, which I think today are about 44, 45 bucks, they looked expensive at 20. But now, could they do a Commonwealth Bank and go to 70 or 80? Possibly they can. Again, the earnings will put some more flesh on the bone. But the thing that we worry about for deflation is the pullback of the costs. Everything just seems to be getting cheaper because everyone seems to be giving things away. And central bankers around the globe are absolutely terrified of deflation they would like to see a little bit of inflation, but deflation absolutely scares the underpants off them. And the reason why that's the case is because it's much harder to fight deflation than it is to rein in inflation.
Is it fair to say, Simon, before we go, that you're fairly bearish at the moment?
Well, I'm looking for reasons to be optimistic, but I've got 3 young kids that are going through the education system that you think, that you worry, what are these guys going to do when they finish school? What jobs are they going to have? Are the people who are at university right now going to be wasting 4 years of their life because they're going to come out of university and the job that they trained for doesn't exist anymore? They're the things that worry us, the things that we can't see. I'm optimistic on people's optimism because we can generally get through it. Yep. But I think that there's a few landmines that will scare us.
Last question before we go to the break. Quick answer. ASX 200 by the end of the year.
I don't think it's going to be much change from where it is now.
Okay.
Actually, but there'll be winners, there'll be big winners, and there'll be big losers. So it'll probably be net.
Thanks for coming on the program, Simon.
Thanks, Marty.